Hello and welcome. You're watching ET Markets. I'm Tanya Aneja, and today I have with me a very special guest, Kranti Batini, equity strategist at WealthMills Securities, is joining us to share his thoughts on the current market scenario, sectors looking attractive after the recent fall, and much more. Thank you so much, Mr. Batini, for joining us on ET Markets.
Thank you, Tanya. Always a pleasure sharing my views on ET markets.
Absolutely. So, Mr. Batini, Indian market is seeing a volatile year. I mean, the undertone of the market continues to remain negative. So, do you believe that this will continue for some more time to come?
Tanya, if you observe the global trends, the influence of the global markets is on high on Indian markets, and also we have seen a saga of funds flows going out of India from past 7 to 8 months. But despite of the fact of foreign portfolio investors withdrawing from Indian markets, but Indian market proven that it's a quite resilient and a resurgent markets when we compare with the global markets and also with the emerging market space.
Absolutely.
So what I say is that resilience is proven, but the markets are moving. The pendulum is moving between extreme exuberance and extreme pessimism. If you observe the market on day-to-day basis, and we are in a season of where the central banks are very uh, cautious about the inflation rising rate and increasing the interest rate cycle. Pre-pandemic, if you observe, there was a global synchronized uh, lowering of the interest rates, quantitative easing. From quantitative easing, we are right now moving towards quantitative tightening from QE to Q2. So when the liquidity is tightening, we can see these kind of uh, pessimism that try to creeps into the market. But for a long-term investor, despite of the things and factors that's happening across the globe, Indian market is in a positive shape, and we are a very good consumer market, and our growth rates are extremely good when we compare with the global peers. So investors with a long-term stance, definitely they can use this skittishness and jittery or pessimism in Indian markets to build their portfolio for long term.
Absolutely. And now let's come to the specific sectors. So, which sectors are looking attractive after the recent fall? I mean, the sectors you are betting on at this point in time that could relatively be safe bets in a rising interest rate scenario as well as a rise in inflation.
Tanya, we are at a very inflection point with respect to the sector specific action is concerned. But given the kind of numbers that's coming from auto sector, and also what we can see is there is a easing of the chips issue that has been lingering with respect to the auto sector is concerned. So that chips issue has been resolving from past few weeks, and the recent numbers looks bright, and the numbers are can be sustainable in the days to come. So uh, in the coming days, we have the RBI monetary policy tightening. That's going to have some impact on the auto numbers, definitely. But if we call up any auto dealer in India, every automobile have a long list of waiting period. So what we can see is there is a earning visibility that's going to transform into revenue over a period of time. So investors with a long-term horizon of at least 1 2 years, definitely they can look into investing in auto and auto ancillary sector as an investment where the valuations looks very attractive. Our topic with respect to auto four-wheelers are concerned, Tata Motors and M&M, Mahindra and Mahindra remains to be our topics in auto sector for the investment is concerned. And also, IT had a decent correction recently. We have seen a run up in IT stocks past 18 months, but we can see some kind of softening of stock prices in IT. So investors with a high risk appetite, definitely they can consider mid cap IT stocks. Stock specific action is very important. Investors with a less risk appetite, they can definitely consider stocks in the big IT stocks, large cap IT stocks. Probably Infosys can be or TCS can be considered to accumulate for long term.
Okay, absolutely. And as you said, we are also awaiting another policy by the RBI. And the MPC is expected to raise the policy rate by 25 to 50 basis points. So, how much of that has been factored in already? And how do you see it for the financial sector going forward?
The initial commentary that's coming from the Reserve Bank governor and also the MPC feelers, what we can see is the rate hike is expected, but what we are going to see is how the liquidity available in the system is crucial for uh, the economy. But the stance of RBI Monetary Committee is always there. They want to give elevation to the growth and controlling the inflation. That the balance is always needed for any central banker, especially in the emerging markets. Growth focus is very much needed. So what I believe is different, despite of the rate hike, but how the kind of measures RBI going to take to accommodate the liquidity into the system is very important. At this point of time, I don't think so. There is a bigger worry for the large cap private sector banks are there. Okay, they have the ample liquidity in the system. They can go ahead with respect to the credit growth is concerned. There will not be any immediate negativity with respect to the liquidity in the system. So we need to wait and watch the measures that's taken by RBI is fully to control the inflation, because the problem with India's inflation is it's more of a supply side, and also it is the inflation that we are getting imported due to high global crude oil prices. So how RBI is going to handle this kind of situation is very extremely crucial at this point of time. So the liquidity, I'm sure there will be ample liquidity in the system for the required credit growth is concerned. So investors can look at the large cap corporate centric private banks for the investment for the next at least 1 to 2 years horizon. They can consider the large cap banks at these valuations.
Okay. And Mr. Patini, there is another risk on the horizon, which is rising COVID cases. So do you think this is something market has moved on already?
Tanya, we need to wait. The cases have been increasing in India, but the pace is slow at this point of time. We need to wait and see at least next few weeks how the pace is going to go up across India. So I don't think so. It is not an immediate worrying factor for the market in India with respect to COVID situation is concerned, because majority of the population is vaccinated in India. Market is not worried too much with respect to the increase of COVID cases in India. It's purely right now the action is more about the FIs withdrawing from Indian markets, and also the global market is playing a crucial role on Indian markets at this moment.
Right. Okay. And what about the steel stocks? I mean, the stocks have corrected significantly after the government slapped a 15% export duty on steel, but it gained on Monday, right? Outperforming in an otherwise weak market. As the reduction in prices of key materials, I think, boosted sentiment for the sector. So, your thoughts on this space?
Steel is a cyclical sector in nature, and investors with a long-term horizon definitely look, despite of government uh, imposing some curbs on the export of steel, but investors can look into because of the earning visibility and also the growth prospects of the Indian economy, and also there is a lot of space is there, Tanya, with respect to infrastructure spending is concerned, and government is going to increase its infrastructure spending in the time to come. Next, probably the government plan for the infrastructure spending for next couple of quarters is robust. So steel is the sector one can look into that, but the current government imposing the current restrictions on the steel export is already factored in. That's why some kind of bottom buying is happening from last few days for the long-term horizon.
And what about the sectors that you're underweight on, especially amid an uncertain global environment?
See, right now, if you see the last year, people were very much bullish with respect to pharmaceutical is concerned. But at this point of time, if you see the pharmaceutical sector as a whole past few quarters has been an underperformer. So, and also we can see many of the companies which are going to have a USFDA inspection in the times to come, how they are going to get the USFDA clearances also is the crucial thing. So these are the sectors one can underweight at this point of time. But Tanya, to be very honest with you, it's going to be a more about a stock specific market at this point of time. It's not going to be a upfront sector specific market with respect to the current environment is concerned in the market.
Okay, well said. Well, it's going to be a stock specific market. But before we let you go, what is your take on the newly listed companies? I mean, if we talk about LIC only, the stock is now trading at a new all time low. It's down over 20% from its issue price. So, what would be your advice as far as this newly listed companies are concerned?
Especially to comment on the life year insurance India stock.
Yeah.
The stock has had a disappointing listing and the stock has been keep on coming down. We don't know the bottom at this point of time because every week it is getting into a new low. It's creating a new low. Today, as we discussed, the stock is trending at a new low for the sector and as a new low it's creating. So what we can see is there is the lack of buying interest and also there is no proper earning commentary from the management of LIC. They have not conducted any kind of investor interaction post results. So the earning visibility and the plans of the management post listing is crucial. But overall, investors, the expectation is so much buoyant during the time of before the listing. But the high expectation on the IPO created this kind of selling pressure on the stock. But those the investors already invested, they can wait on. There is no problem immediately cutting their losses at this point of time. But overall, the growth of the sector and also the dynamics of the industry, life insurance industry is concerned, one can hold on to the stock, but fresh investments can be waited for some point of time till the time we get some clarity with respect to their earnings and also their plans in the coming days.
Okay, on that note, Mr. Batini, thank you so much for taking your time out and talking with us. Thank you.